Okay.
I think we'll do it. Okay. Can you? Okay, good
So
evening.
this will definitely be recorded, and if we cannot attend any further, we can just watch the recording.
Yes, I believe so. They are recording, as they said, that they are going to make it available on e-leader.
Okay, perfect. Thank you.
Okay. Good evening, everybody. First of all, I would like to apologize for everybody. And as Zugi was saying, we had a problem with connection of sound from our side. And I know because I've had many of you complaining. I know that you are lodging complaints. Some have already lodged complaints. I really would like to apologize on behalf of the school. It was not like we came late and let you stay there all by yourself. As she says, we have been here. Personally, I've been here around 4:30 because the main reason was to get the connection right so that when we start at 5:30, everything should be okay. But unfortunately, we have been going on for almost an hour and a half trying to connect. So we really apologize for that. We understand very well that you have left some things that are very important that you could be doing. So it was really unintentional. We really apologize for that. And my name is Advocate Tlouma Pelela, and I hope they already told you that I will be the one working with you throughout from today until we finish the program. I'm just not sure exactly on what day we'll finish the program, but surely I will be with you until the program is finished. I also take note of the fact that we have already we are already about an hour behind. So this is how we are going to work. I'm going to use this visualizer to write where I will need to write. And anybody who've got a question, I'm going to open the chat box here. Please, if you've got a question, put it on the chat box. Number one, please, everyone, can you mute yourself there? Just try and mute yourself because the young ones there making a lot of noise and we cannot proceed. The noise is just at that level. Okay, let's try all of us to mute ourselves. Let's try by all means to communicate through the chat box there. And if you have a question that you can't put on the chat box, also let me know there in the chat box, and then I'll give you an opportunity to raise your question. What is very important, again, I always say, if you've got a question, please do not put it or say you'll ask it at the end of the class. I encourage that if you've got a question, try to ask the question as and when we go so that I address whatever questions that we have so that when we proceed together so that you are not left behind. So let's try. Because of the number that we have here, I'm told that we are almost 300, if not over 300. So try to write in the chat box. I will definitely attend and I will assist you in whatever that you will need an assistant on. Now, as we all know that this is what you call your attorney's bookkeeping, legal practitioner's bookkeeping. So what I'm going to do is that we've got the manual there. Not sure if you have received it in terms of a hard copy or electronic version of it, but the fact of the matter is that that is the manual that I will concentrate on most of the time. And I always don't go through that manual page by page, but if there's a need for me to make a reference, I'll definitely refer you to that specific pages that I will need you to refer to, so that we do not waste most of the time. But at the same time, we have to make sure that everybody understands. I've heard that you were complaining about the test as well, the board exam that is coming. Believe me, I'm here to assist you. I'm here to make sure that at the end of these classes, everybody understand. Yes, that's the chat box I'm talking about. I see Pierre asking, this is the chat box you're talking about. Yes, I can see your message there. You can write a message that you need to write there. So as I was saying, I'm going to try my best to assist everybody. I always tell people to say, that bookkeeping is not a difficult subject, as people will always say that bookkeeping is a difficult subject, is something that you're going to struggle to pass. I can tell you with my experience here, I've been teaching bookkeeping for just over 15 years with the school, and everybody and around the whole country dealing with the same attorney's bookkeeping. And everywhere I go, when I get there, student raises their hands and say, but Mr. Mapela, how are we going to do this? We have never done maths at school. We have never done bookkeeping at school, accounting at school. How do you, the legal practice, expect us to do bookkeeping? Because we became attorneys or lawyers for a specific reason, because we did not want to do numbers. Now you force us to do numbers, and you are telling us unless we pass it, we'll never become legal practitioners. I always say that legal practitioners bookkeeping is one of the easiest accounting that we can work on, because we are only concerned about the principles. I always say to people, accounting should be one of the easiest subjects, because it's all about receiving money and making payment. At the end of the day, you need to know how much you have in your pocket in the morning, and you need to know from what you had in the pocket in the morning, how much did you use during the day? What did you buy during the day? And after the whole day of doing the shopping spree, how much are you left with in your pocket? And if you know how much you are left with your pocket after the day of spending, and then you are a good bookkeeper. That's what we want in this profession. I always give an example to say, let's say you are having, you receive a deposit of 10,000 rands from your client. This is 10,000 rand that you receive from your client. Now, when you receive that 10,000 rands from your client, and we say to you, from this 10,000 rands here, whatever you buy all the disbursement in the amount of 3,500 rand. In other words, at the end of the day, you spend 3,500 rand of the 10,000 rand. And we say to you, this is the legal practitioner's bookkeeping. Then we say to you later, how much are you left with after spending 3,500 rand from the 10,000 rand? And then you say 10,000 minus 3.5, and you say to us, my answer is 6.5. And I can tell you, you write that answer there, we'll give you a mark. You are already on your way towards passing your attorney's bookkeeping. That's basically what it is that we do in our own bookkeeping. We can never ask. Okay, I see people cannot see the screen that I've put there. Okay, do not worry about the screen. Let's forget there is a screen. Let's forget there's a screen. I will explain everything in detail. Okay, I see your messages, all of you that cannot see. Please, let's forget that screen so that we don't waste time. But rest assured that you will be able to follow what I'm saying. So what I was saying is that if you receive 10,000 rands from your client, you received 10,000 rand from your client. We cannot trigger you to say you received 10,000 rand while we know that you have received 100,000 rand. If you receive 10,000 rand, you receive that 10,000 rand from your client, and you know that that is client's money. And if it's client's money, obviously you are going to receive that money in your trust account. What is very important again to remember is that as a legal practitioner, when you want to start practicing, the first thing that you need to have is what we call a trust account. As soon as you certify all the requirements, that you'll be given a certificate to practice for your sole benefit, or as a partner in a legal firm, or as a director, or for your own, on your own account. You will definitely need what you call a Fidelity Fund certificate. And with a Fidelity Fund certificate, okay, switch that off. With a Fidelity Fund certificate, that is a certificate that allows you to practice as a legal practitioner. So what I'm saying is that without a Fidelity Fund certificate, you will not be allowed to practice as a legal practitioner, because you will not be able to open a trust account. And a legal practitioner can only practice as and if they've got, okay. There's something there. Okay. Okay, sorry about that. Somebody left his phone here. Okay, what I was saying is that before you practice as a legal practitioner, you need to have what you call the Fidelity Fund certificate. And with the Fidelity Fund certificate, then you go to the bank, you open what you call a trust account. And in most instances, attorneys will open what you call a trust account as well as a business account. You need to have those two accounts, because the other one is an account where you receive all your clients' money. And the business account, that is where you transfer the fees after even raise the fees from whatever that you have received from your client in your trust account. So a legal practitioner will not be allowed to practice unless they are in possession of a Fidelity Fund certificate. And so it's very important to take that into account. That's why I was saying earlier on, to say when you receive 10,000 rands from a client, for instance, guys, I need to get you, because some said I must switch off my camera. Some says I must switch on. I don't know. I switched off because some of you recommended that I switch off. Okay, let me switch it on again. Okay. What I was saying.
Sorry, Advocate. I think that there's people that they keep on losing connection, and they come back, and they think that you have lost them. People must just listen in terms of what you're saying. You're not sharing anything at the moment.
Yes, look, I'm not going to share anything on the screen. I'm going to just talk, and I'll make sure that you understand. We are going to record, all of us, as and when I will be asking you to record, but you don't need to worry about the sharing of the screen. So what I was saying earlier, okay, thank you. What I was saying earlier on was that, let's say you receive 10,000 rand. Let's go back to that example. You receive 10,000 rands from your client. Now, the client comes to your office, consult with you, and he gives you a mandate. And with that mandate, he gives you a deposit of 10,000 rands. Now, what I'm saying is, if the client gives you 10,000 rands, it is 10,000 rand that you have received. In other words, you take that 10,000 rand that you receive from your client, you receive it in your trust cash book. In other words, you record it. Okay, Bandile. Bandile.
Guys, can we all switch off our mic?
Yes, please.
Thank
Can
you, Advocate.
Can everybody please mute yourself? You can hear the noise that I'm making. Everybody can hear the noise that I'm making because I've unmuted myself. So if you unmute yourself and you talk in the background, therefore your voice and my voice compete, and everybody now get confused as to who is speaking. Please, please keep your system muted at all the times.
Sorry, lecturer, can we request Mr. Ngobeni to switch off his camera, please?
Okay, Mr. Ngobeni, please switch off your camera. It take more space and some people are not able to connect. So please switch off your camera. Okay, Mr. Ngobeni, switch off your camera, please. Mr. Ngobeni. Mr. Ngobeni, can you hear us? Mr. Ngobeni, can you raise your hand if you can hear me? Mr. Ngobeni? Mr. Ngobeni, can you switch off your camera? I think there's a problem with Mr. Ngobeni there. It doesn't seem to be hearing us. I think he's still busy testing his system there. I'll keep on trying to get him to switch off the system. Okay. Look, what I was saying is that if from the 10,000 that you have received from your client, you receive it in your trust cash book. And after receiving it in your trust cash book, our rules is that you need to make sure that you deposit that 10,000 in your trust account on day of receipt. Yes, I'll keep on trying Mr. Ngobeni there to switch off his camera. It seems like he can't hear us. So let's try and see how far we can go, but we'll keep on reminding him to switch it off. Unfortunately, I do not have that system on my side to switch off his camera. Okay. Now,
So,
what I'm saying, okay.
Sorry, I've got my hand raised there. I just wanted to know the trust account you're talking about. Is it a trust? That account, is it like a trust where we go to the master's office to open a trust, or is it a trust account? How do we go about opening the trust account?
Okay, thank you. The trust account that you are talking about is not a trust account that you open with the master's office. This, we call it a trust account. It's just an account that you open with your bank. That's an account in terms of section, I believe it's 86.2 of the Legal Practice Act. So this is an account, we call it a trust account because in that trust, you are going to keep all monies that belongs to your client. In other words, all your client's money must be kept in that trust account. That's why we say every time you receive client's money, it must be deposited into that trust account. At no stage, under no circumstances, is an attorney allowed to receive trust money or client's money into their business account. So there's a difference between the trust account that we are talking about and trust that you'll open with the master's office for the managing of the estate of somebody else or whatever the case might be. So this one does not need the involvement of the master. There is already an arrangement with all the major banks in the Republic that you as a legal practitioner, when you want a trust account, you just go there, want to see the bank manager on the business section, tell them you are a legal practitioner and you need to open a trust account. They know exactly what they need to do. So it's like a normal account, but the rule governing that account are not the same as your business account or your personal account. That's why we say it's a trust account. You are in control of that trust account, but what is in that trust account does not belong to you. That's why we call it a trust account. For instance, if for whatever reasons you become insolvent while you are practicing as a legal practitioner, the Legal Practice Council has got the authority and the power, the same authority and the power that the master will have on that trust and the trust that you open with the master. So the Legal Practice Council have got the authority to come and go into the bank and say, this is a trust account open in terms of the Legal Practice Act, and therefore the legal practitioner is insolvent, is no longer capable to running this trust account, and then they take possession of that trust account and they manage that trust account as if it were you managing that trust account. That's why, again, if you as a legal practitioner, for whatever reason you owe your own people or you owe a number of creditors certain amount of money, your creditors will not be able to attach your trust account because your trust account does not belong to you. It basically belongs to your clients. So your creditors will not attach that trust account. Everything in that trust account doesn't belong to you. And again, as soon as that happens, the Legal Practice Council will be watching, and then they will come in, take away that trust account from you, because they know that when those type of things happen, you are now becoming a higher risk. At any time, you might misuse the trust funds to pay for your own personal debt. If you are indebted to that extent, they can make that decision depending on the circumstance of the merits of each case. So two different ones.
Advocate. Hi, Advocate. I have a question. I was raising my hands and then I posted it earlier, but you didn't notice it. It was regarding the certificate, the funding certificate.
Yeah,
does it apply? Yes. Does it apply? Are you when you stated that each practitioner one, does it also apply if you're working for a huge law firm or a law firm itself? You didn't create your own law firm. Do you still require one to practice as a legal practitioner?
No. If you are practicing or you are working as a PA for another law firm, you are not required to have your own Fidelity Fund certificate. The only thing that you are required to is to pay your annual membership, but you are not required to have a Fidelity Fund certificate. You will only be needed to have a Fidelity Fund certificate if you become a partner in that law firm, or if you become a director. Then in those instances, then you will be required to also apply for your own Fidelity Fund certificate, because now you will be jointly and severely liable with whatever happens in the firm, together with other partners in that particular business. But if as a PA, admitted PA, you don't need to have that Fidelity Fund certificate. You just need to pay your membership fee.
Okay, thank you, Advocate. So it doesn't apply to normal law attorneys?
No, it doesn't. No, it doesn't.
Thank you.
Kuzo?
Another question?
Yes.
Yes. Does it mean that the Fidelity certificate does not apply to an institution or to a legal firm as per se, where in an event where a legal firm is registered, that is the legal firm that has to apply for that Fidelity certificate? Or is it that the Fidelity certificate does not accrue to the legal firm, but to respective individual directors of the firm?
Yeah, those directors of the firm need to have the Fidelity Fund certificate, correct?
Okay, thank you.
Abel?
No, I'm the one who had actually raised my hand, so you've sorted me out. It's fine.
Okay. And you concentrate on what will be required to successfully pass the exam. Thank you. Vashana, thank you very much. Yes, I'm definitely going to do that. I just wanted to get the basic right, so that everybody understand what we are talking about. That's basically my intention. And please, guys, there's a message that comes in almost every second or every minute, and I can only access 5 messages on my screen, otherwise they disappear. So if I didn't read your message, because if I concentrate a lot on reading messages only, I will not do anything. So if I don't answer your message, doesn't mean I'm ignoring you, or I don't want to answer your message. You can post it, or later on you can ask that question verbally. I'll attend to your question. So, but if you can write it there, write it. If I see it, then I'll address it. So never think that I'm ignoring you. I won't do that. So now, that is what is very important. Again, before I move on, I was talking about having to deposit money into your trust account. And what I was saying is that the money that you receive from your clients must be deposited into your trust account on day of receipt. That's very important. You also get theory questions around this. How often should an attorney deposit money into their trust account from their clients? So the answer is you will deposit money from your clients or the money that you receive from a client into your trust account on day of receipt, unless if you have received that money beyond the bank's working hours, in which case we are saying the next available business day, you need to make sure that you deposit that money into your trust account. It doesn't matter the value of the money that you have received from your clients. Remember, what is very important is that every time you receive money from your clients, you need to issue what you call a trust receipt. So in that trust receipt, it tells the Legal Practice Council to say, you have received clients' money on the 10th of May, 2021. And the 10th of May, 2021, I'm just giving an example, was a Tuesday. And for whatever reason, that money get to be deposited on a Friday. And if that happens, already you are in trouble with the Legal Practice Council, because you need to tell them what happens with the money on Wednesday, what happens with the money on Thursday. That simply will mean that you borrowed yourself clients' money and then decide to deposit it on Friday after 2 days of having kept that money with you. So it's very important that the client's money need to be deposited on day of receipt. Why is this very important to the Legal Practice Council, that all clients' money that you have received must be deposited on day of receipt? What is very important and what you need to remember always is that as soon as you deposit that money into your trust account and you start earning interest, those interests accrue to your Legal Practice Council. So that is why they will not allow you to let them lose a single cent of the money that they could have received, and therefore that money assists them in carrying you up as a legal practitioner with all the problems that they have to finance on your behalf. So that's why it is very, very important that you need to deposit money from the clients in your trust account on day of receipt. You don't keep it, and you cannot. There's also a question that also comes to say, can you as a legal practitioner withhold trust funds to cover anything, whether it's a fee or a disbursement or whatever the case might be? Let me give you a good example. The client comes to your office in the morning. He comes with a deposit of 10,000 rand to say, this is a deposit of 10,000 rand, or this is a payment of 10,000 rand. I am paying you this money. Can you please go and apply for a bail on behalf of my child who was arrested yesterday, and the bail hearing is today? And you as a legal practitioner, you know that you're going to go to court. You're going to go to court, and then you apply for a bail, and then you are going to be entitled to that money. Now, the question is, can you keep that money in your pocket until you have applied for a bail and the money belongs to you? The answer is very simple. You cannot do that. You are not allowed to do that. As soon as you receive that money from the client, you need to issue what you call a trust receipt. And that trust receipt must correspond with your bank statement. In other words, if your trust receipt says you have received 10,000 rands, that 10,000 rand must also be received in your bank account. In other words, your bank account must also say you have received the 10,000 rand. Why do these two accounts need, two books needs to always correspond? Is because at the end of each and every month, you as a legal practitioner, you need to do what you call a bank reconciliation statement. And when you do your bank reconciliation statement, which is something that we're going to do not long, you need to make sure that you reconcile your cash book with your bank statement. In other words, if your bank statement says for the month of May, the total amount received in the bank statement is 100,000 rand, and therefore, in the cash book, you must have received that 100,000 rand. So you can't receive 100,000 rands in the bank statement, and then the cash book receive 50,000 rand, and then you leave it like that at the end of the month, and then you say it's okay. So it's not okay. You need to reconcile that. You need to see what is it that you have received in your bank account, in your trust bank account, which you have not received in your cash book. And therefore, you need to record that in your cash book so that your cash book and your bank statement, at the end of the day, they balances. At the end of the day, they must balance those two accounts, your cash book and your bank statement. Now, moving forward.
Sorry, sir, if I may ask, okay. I had my hand raised up. I just want to know.
Sorry, is that Sydney?
Yes. Sir, I want to know, am I allowed to receive cash, let's say in a corridor, in a court corridor as an attorney? Can I receive, and the client comes and just gives me the cash and can I just accept it and put it in my pocket?
Sydney, what is very important is that this is something that I always advise the attorneys about. In what do you call it? In our profession, you can say it's not allowed. And I always say to legal practitioner to say, you need to be very careful. It starts here. Let's say you are a practitioner, more especially you as the new one, that you start going to court. You find these people there that have been there at court. Some of you knows them. They have been on that court corridors for many years. And when clients comes to court, they are the first people that sees those clients and they prey on new legal practitioner. If they can see that you are new, they get those clients and they come to you as Sydney and say, Sydney, we've got a client here. We can get clients for you. And then you say to them, okay, give me the clients and then we'll talk about money. And they say, no, we're not talking about money. We've got clients, we give you clients, you give us 50% of what you charge your client. Now, because you are a new practitioner, you are hungry for money, you agree to that arrangement. Now, a client comes, he gives this guy money, 10,000 rands, say, I need a bail application. The guy take the 10,000 rand, he come to you as Sydney and say, I've got a client here that needs a bail of 10,000 rands. Sorry, he needs a bail application. Can you assist? He also has given me a deposit of 5,000 rands. Now, remember how much the client gave him? 10,000 rands. And he says to you, the client has given me 5,000 rand. You say, no, 5,000 rand it's all right. 2.5 I'll get and I'll give you 2.5. It's not a big job that I'm going to do. Now, you do that, you take the 5,000 rands with yourself, you put it in your pocket. Now, this is what happens. It doesn't happen only in that. Even if you take the clients directly, this is going to happen. Now, this client gives you that money. This person introduces these clients to you as the attorney that is going to assist. And then you also give this client your business card to say, this is my business card. Remember, with this guy, your mandate is to apply for a bail. But that's not a mandate from the client. The client has got 10,000 rand. In the client's mind, the 10,000 rand is for the whole trial until the matter is out of court. You apply for a bail, you go. The client comes back to court. On the postponed day, you are not at court, he's got your card. He says to the magistrate, my attorney is not here. I called him and he's not answering my phone. The magistrate postponed the matter. The matter comes back again suddenly. And then the client was able to get hold of you. And you say to the client, no, I'm not going to come there. I only did a bail. The matter goes before the magistrate. The magistrate gets angry. He referred the matter to the Legal Practice Council. Mr. Lebelo, can you try and switch off your camera, please? And then the clients now report you to the Legal Practice Council. Just want to move it quickly. Now, when the matter gets to the Legal Practice Council, the client says he has given you 10,000 rand. And then you say, no, you have not given me 10,000, you have given me 5,000 rand because you know about the other 2.5. And then the Legal Practice Council asks you, Mr. Attorney, let's see the trust receipt that you have given the client. And you don't have the trust receipt. That's already a charge with the Legal Practice Council. And therefore, it means the client has given you 10,000 rand. If you can't produce the receipt, it means you have received the 10,000 rand. Now, number one, you did not give the clients the trust receipt. Number two, you did not deposit money into your trust account the way that you should have done after receiving that money from a client. And number three, you are charged with refusing to assist the client in a legal matter. And therefore, you are already in serious trouble. Even if this client has given you money directly, I can tell you, clients can change. They can give you money now, you are laughing, you are doing everything, you put that money in the pocket, it doesn't go into your trust account. And then later on the client turns around and wants things that you are unimaginable. And then they report you to the Legal Practice Council. The Legal Practice Council says, let's see the trust receipt. You don't have a trust receipt. Already you are in trouble. So that's why I always say, please avoid doing it. Avoid taking money and not giving the clients the receipt. It can either be a trust receipt or a business receipt. Let's say, for instance, you work for that client while you are there. It was something that you had to attend urgently there at court. You did not have the intention of attending to that matter. And then, for whatever reason, you get the money there at court, on the court corridor, and that's your money because you have already done the job. You can do whatever you like with that money. But again, this client comes back and he wants that money back because he is complaining about your services. He reports you. So the Legal Practice Council will say, let's see the receipt that you have given this client. You don't have the receipt. It must either be a business or a trust receipt. If you don't have the receipt, whether trust or business, and therefore you are again in trouble with the Legal Practice Council. I always say, avoid taking cash from client and not giving them receipts. I know some people does that strategically for avoiding other expenses like your VAT and all those other things, but please know it is very dangerous. Okay, now, as I was saying, that when you are a legal practitioner and you operate in your books, now you are going to receive money at some stage, and at some stage you are going to pay money. So there are certain principles, there are certain terms that we use in our bookkeeping or in bookkeeping as in general, when you receive and when you make a payment of money from your account or your business account, whether it's a business or a trust account. So you don't just say, I have received money and therefore on this account of my client, I'm going to write, I received money. Or on this account of my client, I'm going to write, I've made a payment. Now, this is what happens. We've got what you call you either debit or credit an account. Now, how do you differentiate? How do you know that from one account what I debit is when I receive money or when I make a payment? I want us to look into the two accounts. I want us to look into what you call our books of prime entries, and which is what you call a trust cash book and a business cash book. A business cash book and a trust cash book as your books of prime entry, of your primary entry. Now, when you look at those books of your primary entry, I want you, as I'm speaking now, I want you to draw some sort of a T account. I want you to draw something like a T account of this nature. Just something like this. I'm sorry, we don't have a screen. As I said earlier on that we are struggling with what's happening now. Okay, I want you to draw something like a T account, something like this. Just a T account. And now, as soon as you draw that T account, you write it a trust cash book. Your trust cash book. And then in this trust cash book, you'll see on the left-hand side there, I have written the debit. And then on the right-hand side, it is what you call the credit. In other words, your trust cash book is like any other account. On the left-hand side, it's always a debit. And then on the right-hand side, it's always a credit. But what is different about your the debits and the credit in your trust cash book is that on the debit side, which is your left-hand side, is where we receive. We call it the receipt side in your trust cash book. So the debit side of your trust cash book is what you call the receipt side. And then the credit side of your trust cash book is the payment side. How do we distinguish between what is to be deposited into the business account versus the trust account? Okay. Yeah. Now, I'll answer that just now. The debit side of your trust cash book is what you call the receipt side. In other words, when you receive money from your clients, when you receive deposits from your clients, that deposit will be recorded on the debit side of your trust cash book. In other words, if you receive 10,000 Rand deposit from your client, that 10,000 Rands will be recorded on the debit side of your trust cash book as a receipt. And what I'm trying to say is that your trust cash book, the debits and the credit, they works in the opposite of what you know a debit is and a credit is in your everyday life. And your trust cash book works the same way as the business cash book. In other words, in the business cash book and the trust cash book, whatever you receive must be recorded on the debit side. Whatever you pay must be recorded on the credit side. That's why the credit side, we call it the payment side. As you can see there. I don't know what's happening with this. As you can see there, just keep on disappearing. I don't know what's happening. The debit side, as you can see there, I've written a plus sign, and the credit side there, it's a negative sign. What I'm trying to say is that where I've written a negative sign is where you make payments, and which is the credit side of your trust cash book, and that is the right side of your trust cash book. In other words, you receive on the left-hand side, and then you make a payments on the right-hand side. That is in those two books of prime entry, which is your trust cash book and your business cash book. You'll always receive on the on the left-hand side, and you always make a payments on the right-hand side. Now, when you move from these two books of prime entry that receive and make payments in the direct opposite of what you'll do in your everyday life, then you go to what you call your ledgers, your secondary books of entries, your ledgers. And your ledgers again will also be in the form of a T account. The same T account that you recorded when you do your trust cash book. This is your ledgers or your ledger accounts. And then you also have the debit. So the debit will always be on the left-hand side, and the credit will always be on the right-hand side. But now, let's look on how the ledgers works as opposed to how your cash books works. With the cash books, we know that when you receive, you debit. When you make a payment, you credit. Now, when you go to your ledgers, then it becomes the direct opposite. The credit side is on the right-hand side, the debit on the left-hand side. That's correct. When you go to your ledgers, things goes back to normal. You know, a debit means something is going out, and credit means something is coming in. So in the ledgers, you go back to normality. So in your ledgers will basically, I don't know what's happening. So your ledgers will basically look like something like this, ledger accounts. You will see the debit side there is a negative, and the credit side is a positive. Now, that is the difference between your ledgers or your secondary books of entries as against your books of prime entries or your primary books of entries. Okay, is there somebody talking? Okay. Why do we have our books like that? Why do we have your trust cash book and your business cash book receiving on the debit side, but the ledgers paying on the debit side? Why do we have to do that? Because of what you call the double entry rule. Now, if you look into your manual there on page 8, we talked about what you call the double entry rule. How does it work in your double entry rule? It works like this. Let's say, for instance, you receive money from your clients. When you receive money from your clients, you receive that money by recording it on the debit side of your trust cash book. Remember, all the monies that you receive from all your clients must be recorded on the debit side of your trust cash book because it is client's money. Now, as soon as you record them on the debit side, which is the positive side of your trust cash book, which is the left-hand side in your trust cash book, as soon as you record that 10,000 Rand there, then it must be posted to the secondary account. And the secondary account where this 10,000 Rand deposit must be posted to, it must be a ledger account for the clients on whose behalf you are receiving that money. Let's say, for instance, you are receiving that 10,000 Rands from your client X. Therefore, you'll debit your trust cash book with 10,000 Rands from X. Now, that's a debit. Now, you need to post that transaction to X trust ledger account. When you post that transaction to X trust ledger account, when you get to X trust ledger account, in the ledger account of X, it must be credited. It must be credited. Now, if you look at those cash book and the ledger account as I've just indicated now, you will see that in your cash book, the debit side is the plus side. And then you go to X trust ledger account, the trust ledger account, or the secondary books of entry, where I said things start working in the normal way. You go to that ledger account, and then you see the credit side is the plus side. And therefore, if you debit in your trust cash book on the plus side, and then you post it to your ledger account, it must also sit on the plus side to show that you have indeed received that money on behalf of that specific client. Now, you receive another deposit from another client. Let's say you're receiving let's say you are receiving 7,000 Rand from this one client. Now, when you receive that 7,000 Rand from this one client, you must also receive this money in the same trust cash book that you have received the 10,000 Rand, and you are going to receive it on the debit side. As you have received the 10,000 Rand, and then you label it as money received from client Y. So in practice, those are done by means of using reference numbers in as far as your files are concerned. But for now, we will use clients' names. Now, you receive this 7,000 Rand from your client Y, and you record it again on the debit side of your trust cash book. And as soon as you receive it on the debit side of your trust cash book, please remember, you can never make one transaction in a single entry and leave it there. As soon as you put your pen on the debit side of your trust cash book, you need to already be asking yourself a question. Now that I'm debiting my trust cash book, when I move from the debit side, I need to go to the credit side in the secondary account. And now the question is, whose credit side are you going after debiting your trust cash book? Now the question is, whose money are you receiving? If it's Y's money, then you need to go and open Y's trust ledger account again. That ledger account, remember in the ledgers you receive on the credit side, which is the right-hand side. On the right-hand side of that T account, where you have recorded, where you are receiving on behalf of Y, it will be recorded on the credit side because it's a debit in your trust cash book. So what I'm trying to say is that when you receive monies from your clients, you are going to receive all those monies on the debit side of your trust cash book. I need to open, let's go to page so that you can see that trust cash book. I want you to see how that cash book looks like in the, you can open page, sorry. You can open, just open on page 89 because that one is very clear there. Open on page 9 of your manual. That's why get their own ledger account. Yes, correct. Y will also, you will also have to do a ledger account for Y. In other words, you are going to do another T account for Y. What is going to happen is that, let's say, for instance, you've got 5 clients, all of them come and they pay you deposit. All those deposits from 5 clients will be received on the debit side of one trust cash book. In other words, you are not going to open 2 trust cash books. You are going to open only one trust cash book. But because you have received all these monies from 5 clients, when you post it, you are going to open a T account, a trust ledger account for each of those clients. You are going to have one trust cash book receiving 5 deposits. When you post it, you're going to post it to 5 trust ledgers. In other words, for each client, you open a trust ledger account. Now, let's look at this. You'll see there on page 89. That's a trust cash book that is a bit clearer there. You'll see in that trust cash book, for instance, on the debit side of that trust cash book on the 3rd of June, you've got deposit purchaser there. And you'll see that 100,000 rand deposit is recorded on the left-hand side of that trust cash book. That tells you that you receive that money by recording it on the left-hand side of your trust cash book. That is how you receive it. And then the pro forma cost that you received from the purchase again for 40,000 rand is also on the left-hand side of the trust cash book. And then you receive payments from the purchase of 10,000 rand. All those that appears on the left-hand side is the money that you have received from your clients. Now, if you go to the, before we even move there. Now, I want you to check this. Let's look at this deposit of 100,000 that you received on the 3rd of June. If you look at that deposit, it's recorded on the debit side of your trust cash book. That's 100,000 received on the 3rd of June. Now, let's go to the next page. Let's go to the next page. You look on the top there, it's a business cash book. Let's not look at that. Let's look at the next one. You'll see that they say trust ledger accounts. And they say purchase as trust.
Advocate,
now,
sorry
if
to
you look,
page.
okay.
Which page are you on?
Page 89 and 990. Page 89 and page 90 of your manual.
Is it page 9 or page 89?
89, sorry, 89
okay.
And 90.
All right, thank you.
Yes. So basically, there is always double entry, meaning a single transaction affects 2 corresponding accounts. Correct? The correct JL Mukhara. That's exactly what I'm trying to explain, exactly that. Now, if you are all on page 89, I was still talking about that deposit of 100,000 that you see recorded on the debit side of your trust cash book. And I'm saying on the 3rd of June, that is the money that you have received. And now, as I was saying, you cannot just record that money there and leave it like that. I'm saying as soon as you record it there on the debit side, you should already be asking yourself a question. To which account am I going to post this transaction? And wherever you post it, you must post it to the credit side because here it's on the debit side. Now, the answer is very simple. Whose money? From whom are you receiving this money? This money is being received from the purchaser. It tells you it is the purchaser's money. Now, let's go to page 90. While we're in there on page 90, you'll see the first account there is the business cash book. Don't look at that one for now. The next one, it says trust ledger accounts. And then you've got the purchaser trust account. That is that trust ledger of the purchaser. Now, if you look on the right-hand side, which is the credit side of that purchaser's trust ledger account, you will see we have Sibulele in your manual. We are in your manual. In the manual that you receive from lead, page 989 and 90. And then we are now looking at page 90. Now, if you look on that trust ledger account on the right-hand side, which is the credit side, you will see there, the first transaction, it says 3rd of June, X trust cash book, and it says 100,000 rand. Now, that is that 100,000 rand that you have received on the debit side, which is the left-hand side of your trust cash book. And then when you post it to the right-hand side of the purchaser's trust ledger account, which means now the purchaser's trust ledger account shows that you are holding 100,000 rands on behalf of the purchaser. In other words, every time you receive on the debit side, you must post that transaction to the credit side. And it's very simple and easy to post it there, because the answer is, on whose behalf am I receiving this money? From whom am I receiving this money? If you have received that money from me as your client A, that means you'll open client A's trust ledger account and you credit it. If you receive another money from your client B, and then you receive that money on the debit side, and then you open B's trust ledger account, and then you credit B's trust ledger account. Now, let's quickly look on the payments. Still on the same trust cash book on page 89. Okay. I'll answer you just now, Shelley. Now, let's go to page 89. Now, on page 89, all those transactions that you see on the right-hand side, those are the payments. The first one there, it says section 86 sub 4, investment at ABSA. That is the money that you pay out of your trust account so that you can invest it. So when you pay this money, it's credited in your trust cash book, and then you go to your ledger account, the investment account, which I'll talk about later on. You will see there on your investment account, because that money was paid on the 13th of June. On the 13th of June, and then you go to the investment account. Okay, on page 90, the bottom transaction there is your
you don't have page 90 on this soft copy that I downloaded.
You don't have page 90.
Is experiencing that. It's 89, then 92.
Oh.
Is there anyone who is seeing that, guys?
Yes, I'm sorry to.
Yes, I would like to concur. There is no 90 and there is no 91.
There's no 90 and 91.
Yes, page 89, then 92.
Okay. I'm sorry about that. I'll speak to the school to try and see if they can send you that page. Okay, but I'll just explain it.
We do have on the hard copies, advocate.
We don't have hard copies.
Some of us don't have.
But hard
copies.
But hard copy doesn't have 91.
Yeah, the hard copy doesn't have 91. I know it was just an error in numbering of the page, but 91 doesn't make any difference. I'm just worried about the page 90 not appearing on some. But look, okay.
I would like to find out. Some of us haven't received our material. So
no, advocate cannot answer that. But the thing is, we are enjoying the class. It's flowing, but there is no page 90 and 91 that is referring to.
Okay. Look, what I will do is that I can see number of you here saying they have not received their manual. Please, may you please try to, I believe all of you should have Zuki's email address. Please, if you've got Zuki's email address, just email her and say you don't have the manual. She will try and try to send it to you electronically. And though that page 90 that is missing, I'll also, after this class, I'll speak to her to make sure that she sent it to you at least by tomorrow so that all of you have got that page. But I'll just explain what's happening there. So what I was saying was that when you make a payment, you make a payment from the right-hand side of your trust cash book, because all the payments will be made from the right-hand side of your trust cash book. And as soon as you credit the trust cash book by recording a transaction on the right-hand side, now you should also at the same time ask yourself a question: on whose behalf am I making this payment? If you are making a payment on behalf of client A by crediting your trust cash book, then you know, because I am making a payment on behalf of client A, that means the person that I need to debit is client A's trust ledger account. If I credit my trust cash book with an amount of 20 rands, and this 20 rands I'm paying a disbursement on behalf of my client S, that means after crediting my trust cash book with 20 rand, I need to go to S trust ledger account and debit him with that 20 rands. So you need to be very, very careful here. You need to be very, very careful there. When you debit one account, you need to credit the other. When you credit one account, you need to debit the other. What is very, very critical is that when you debit your trust cash book with my money, you need to credit my ledger account. When you credit my trust cash book on my behalf, in other words, you are paying cancel on my behalf, you need to come and debit my trust ledger account. That's very, very important to remember. That is what you call the double entry rule. When you debit one account with a transaction, with the same transaction when you post it, it must be a credit. When you credit one account with a transaction, the same transaction when you post it, it must be a debit. In other words, you cannot debit and debit with the same transaction. You cannot credit and credit with the same transaction. Please remember that. You rather debit and credit the wrong account, or credit and debit the wrong account. Because if you credit and credit, you need to know before you even finish writing that what I'm doing is wrong. So you debit and credit, or you credit and debit, and that is what you call the double entry rule. And then now, as I said about your double entry rule, please make sure that you understand your double entry rule. You get page 89 of the soft copy, it is page 90 hard copy. Okay, sorry. I think Desiree here is assisting us to say those who have got a soft copy, apparently your pages are a bit behind. As we were looking at page 89, you should have been looking at page 88. Unfortunately, I don't have that soft copy. But what I get here is that your page 88 is the page 89 that I was looking at. And then your page 89, the page 90 that we're referring to on your soft copy is page 89. On your soft copy is page 89. Okay. Yeah. So now, if I go back there just to look at that one transaction, when you look on your page 88 of the soft copy and page 89 of the hard copy, on the credit side, what I was saying is, let me just look at one transaction there. Let's look at the estate agent on the right-hand side, on your trust cash book. On your trust cash book should be page 88 or 89. On your trust cash book on the credit side, you will see transaction number 3 that it says estate agent. That means you are paying an estate agent an amount of 15 rand, and it's credited on your trust cash book. Now, if you look at that trust cash book on the credit side, and then you say, you are paying estate agent on whose behalf, it tells you there you are paying that estate agent on behalf of the seller. And for that reason, let's go to the next page and look for the seller's trust ledger account. I believe the seller's trust ledger account on the hard copy should be page 92. It's the transaction on the top of the page. Okay, Jeffrey, try to mute yourself there. Okay. The seller's trust account, you will see there there was I received a phone call. The message disappeared. Okay. Seller's trust account there. You'll see that 15,000 Rand is recorded on the debit side of the seller's trust account because you are paying the estate agent an amount of 15,000 Rand on behalf of the seller. And therefore, you go and debit the seller's trust ledger account with that 15,000 Rands. The 15,000 Rand is a payment that is made on behalf of the seller. And what is very important again before I move on is that please remember that every time you make a payment or you pay a disbursement from the trust cash book, like we have paid the estate agent's account there, please do not open an account for the disbursement. In other words, do not open a ledger account for the estate agent. Just say to yourself, I am paying an estate agent on whose behalf? If it's on behalf of the seller, you debit the seller. I'm paying counsel an amount of 3,000 Rand from my trust cash book. On whose behalf am I paying counsel? You are paying counsel on behalf of client S. Therefore, you go and debit client S. Do not open an account for that disbursement. If you do that, you're going to get lost. So just say, on whose behalf am I paying from my trust account? If it's on behalf of a client, debit that specific client's trust ledger account. Please remember that because I've seen many times students will open a separate ledger account for the disbursement, and from there they are lost. They don't know where to go and how to come back and reconcile that ledger account that they have opened on behalf of for the disbursement. Please remember that. The question is, on whose behalf am I making that payment? If it's on behalf, it's my behalf, then you come and debit me with that account. What is very important is always remember, for every debit, there must be a credit. For every credit, there must be a debit. That is what we call your bank, sorry, your double entry rule. And then you will see there on your, I'm even afraid of referring you to pages there because they're not the same. On your page, okay, somebody asked a question earlier on to say, what document do we have or do we keep in our office to account except the document that we give to the auditors? I think that was the question, if I still remember well. Number one, you need to be very, very careful. Remember, number one is that an auditor is an independent person. An auditor is not a legal practitioner. So if you as a legal practitioner, you give your documents for your file to an auditor, please, I always say, yes, sometimes you'll find that it's too many documents, but the advice is always make copies of the documents. You will never know what will happen to your documents while they are sitting with the auditors. You will never know. The auditor's office might bend down with your document in the auditor's office, and that is not going to excuse you from accounting to the Legal Practice Council at the end of the year. You are still expected to account to the Legal Practice Council. So it's always the legal practitioner responsibility to make sure that all the documents are always readily available in their offices, so that when they are needed by either the Legal Practice Council and can you please explain again why investment of 13 June is recorded under a separate account? Okay, I'll explain that. Don't worry. Yeah, what I was saying is regarding the safekeeping of the document, and that is still the responsibility of a legal practitioner to make sure that those documents are kept safe. If you don't have copies, make sure that you have you can guarantee that those documents will be safe. As I say, sometimes it's just too many documents, and that you have to work on, unfortunately. Now, can you explain again why the investment on 13 June is recorded under a separate account? Look, I didn't want to explain this now because it might get you confused, but I'll try and explain it now. But now, what is happening is when you invest, or let's start by receiving money from your clients. You receive that money on the debit side of your trust cash book, and then you credit your client's trust ledger account. That says now you've got a trust creditor, which is your client, in the amount of 100,000 Rand that you have received from your client. You owe this client 100,000 Rand as it's reflected on the credit side of his trust ledger account. Now you invest the 100,000 Rands. When you invest the 100,000 Rands, you will credit your trust cash book. In other words, you are paying money out of your trust cash book. Where does the money go? To the investment account. That is why you will open another T account for the investment, because when that money is invested, when we look at your books, we must see that this 100,000 Rand that is credited on the purchaser's trust ledger account, you have invested it at ABSA, and here it is in your record that it's invested at ABSA. When you invest, you don't debit the client's trust ledger account. Because if you debit the client's trust ledger account, you are simply saying, you, the clients, I'm no longer holding this money for you. I don't have any obligation to account to you, while you, in actual fact, still have the obligation. Remember, when this money is invested, you are the person in full control of that money on behalf of your client, and therefore you still owe the client. That is why you will not debit the client's trust ledger account when you invest. Take it out of the investment account, out of the trust cash book, and put it into the investment account. And later on, when we are dealing with the investment, I'll explain to you why that money is sitting on the debit side of the investment account. So I'll explain that later on in greater detail, because what is very important, again, that you need to also note is that your client's trust ledger account can never reflect a debit balance. You can never record a debit balance on your client's trust ledger account. And you can never have a credit balance in your trust cash book. Your trust cash book must always reflect more transactions or more value on the debit side. If your trust cash book shows more value on the credit side, you need to know there is a problem that you need to attend to with immediate effect. If your client's trust ledger account reflects a debit balance and negative balance, you need to know there is a problem that you need to attend to with immediate effect. And how do you attend to that problem? Because you get, again, a lot of theory questions around this. How do you deal with a situation where your trust account reflects a negative balance? If for whatever reason your trust account or your trust cash book reflect a negative balance, as a legal practitioner, you must transfer funds from your own business account and pay that money into the trust account to cover that deficit. Whatever you need to investigate, if you have to recover money from whichever client, you will do that later. But as of now, because you cannot go overnight with your trust account with a negative balance, you need to immediately inform the Legal Practice Council and inform them what you have done to take care of that problem. And what you have done is transferring funds from your own business account into the trust account to cover that trust deficit. That's what you need to do. We have had this question in the board exam. I think if not the last board exam, not the last one, should be a board exam before the last, the one that was written. We had this question in the exam to say to students, what do you do if for some reason your trust account reflect a negative balance? You need to have remembered or knew that you need to transfer funds from your own business account and receive that funds in your trust account to cover your trust deficit. Please remember that. The question was, another question that I read here from Richard, can we pay disbursements from the trust account or only from the business account? Very, very good question, because there is this thing that I've seen with many students that they believe that disbursements are always paid from the business account. Disbursements are not paid from the business account. The business account, you use it as a last resort. So disbursements on behalf of your clients will always be paid from your trust account, unless if you don't have money in trust on behalf of that specific client on whose behalf you need to pay that disbursement, then you go into your business account and you pay on behalf of that client and you make them a business debtor for whatever amount that you have paid on their behalf. Please remember that. You always pay clients disbursement, you always pay disbursement on behalf of your clients from the trust account, unless if there is no money on behalf of that specific client, then you can pay from your business account. That's why I'm saying paying disbursement from your business account on behalf of the client must be the last resort. I think if I put it that way, you will remember it. And is there other question that I needed to? Okay, I think for the ones that I can see on the screen is the questions that I needed to, I've answered there. Now, on page 14 there of your manual at the top there, they say that the details that will be recorded in the cash book will vary from practice to practice, with the intention being to enable the user of the cash book to be able to identify the entry in the cash book back to the underlying source document. This is very important. The minimum information that should appear for a deposit is the date, the relevant receipt number, from whom received, for whose account, the amount. Okay.
What page are we on now?
Page 14.
Thank you.
Yeah, page 14. I would like you to read that page 14 there to see the documents, so the information that should appear when you receive money, should appear in your cash book when you receive money and when you make a payment. Thank you. It's page 14. So it's very important that in your practice, you record that information. So as we say, the information will differ from business to business, depending on how they record their information in their books. as long as they enable the second person who will come and hold that cash book to know when was the money received, on whose behalf, what was it for which file. They need to be able to identify this without coming and asking the person who recorded those documentation. What? Yes. Yeah. Yes. If Jaco. Yes. If the trust account has a negative balance, rectify it with money from your business account. Correct. Do we also record disbursement in the trust ledger account in the debit side? Emmanuel, yes. If you have paid, let's say for instance, you'll see when we are making that payment for the estate agent, we created our trust cash book and then we debited the seller's trust ledger account. Yes, the disbursement, you will also record them on the debit side of your client's trust ledger account. So you don't open a separate account for the disbursement. On that ledger account of your client, you just record it there, as long as it will tell us that this debit you were paying the tracing agent on behalf of that seller, and then that's all. That's how we are able to trace that transaction, and that is how they need you to record your books. Okay. And please, you need to be able to distinguish between your trust and business transaction. Business transactions are those transactions that are related to business, and therefore they must be recorded in your business account. In other words, you cannot pay a business expense using the trust account. It's not allowed, because in the trust account, you are holding clients' money, and in the business, it's your business. So the client's money cannot pay for your business transaction. So you need to always remember that. Business transaction must always be recorded in the business account, and the trust transactions must always be recorded in the trust account. So it's very important to always remember that, so that you don't mix up the transactions. Now, I want us to look at what we call your bank reconciliation statements. I want us to look at bank reconciliation statements. Let's look at bank reconciliation statement. I always say, you also require disbursement in the trust ledger account. Okay, we have already answered that. Your
advocate,
yes.
Sorry, I put my hand up.
Yes, sir. Yes, Samkel.
Yes, I think for the benefit of those that don't have the manual, can you just please refer them to the page where they can get the bank recon?
Okay. Your bank reconciliation statement are being explained from page 14. That page 14. And then you'll see we're talking about your bank reconciliation statement up until page, okay, up until page 25. From page 14 up until page 25, that is where we will be talking about your bank reconciliation statement. So please remember, I will not be referring you to page by page or paragraph by paragraph as and when I'll be dealing with those transactions. I do not want to confuse you a lot, but everything that I talk about, you'll find it there in that manual. And then if you've got time, please go through it. But as I go through that, I'll refer you to some specific pages where I'll want you to refer to. So that's basically how I'll be doing this course throughout. Okay, Samkela, please remember to mute yourself when you are done. Okay, so you'll see your bank reconciliations statement start from page 14 there. But I need to basically discuss this with you. I need to talk with you about bank reconciliation statement so that I made it as easy and as simple as it could be, so that when you go there, read that manual, you know exactly what you are looking at. I always say that for you to get your bank reconciliation statement correct, you need to understand why are you doing bank reconciliation statement? What is bank reconciliation statement and why do you do bank reconciliation statement? You are doing the bank reconciliation statement because you want to reconcile your cash book with your bank statement. Where do we find manual on our e-lead website? Hey, those difficult questions for me. I haven't checked on their website how they put the manual, but I know that's Ozuk is listening, and she will assist with that. She will assist with that. Okay, now when we talk about the bank reconciliation statement, I am saying the first thing that you need to understand or to ask yourself is, why do I do bank reconciliation statement? Pumelele, can you please switch off your camera? Why do I do bank reconciliation statement? And as I was saying, you are doing, sorry, bank reconciliation statement because you want to reconcile your cash book with your bank statement. Remember, the cash book is where that trust cash book where you record on a daily basis. When you receive money in your office, you record it in your cash book. When you make payments, you record those payments out of your cash book on a daily basis, and that is in your cash book. Alison? Oh, thank you. Now, you record that in your cash book. Now, we are saying, remember earlier on I said to you, when you receive money in your cash book, on the same day of receipt, you need to deposit that money into your bank account, your trust bank account. Therefore, your trust cash book must say you received 10,000 rands, and your bank statement must also say you received 10,000 rand. So they must communicate. If you make a payment out of your cash book, if you transfer money out of your cash book and you transfer an amount of 3,000 rand, that 3,000 rand is going to end up in your bank account. And therefore, your cash book must show that you make a payment of 3,000 rand and that 3,000 rand was paid by your bank. And therefore, your bank statement and your cash book must always balance. Carla, you have a question? I don't, on my side here, it doesn't show your full name. It just colored Didas, something like that. I'm not sure if that is your complete surname. If you don't have question, try to mute yourself.
Sorry.
Okay. Okay. Now, your trust cash book and your bank statement must always reflect the same balance, because when you do your bank reconciliation statement, which we say you do your bank reconciliation statement at the end of each and every month. Now, when you do your bank reconciliation statement, this is exactly what you are doing. If, for instance, a client made a direct payments into your trust account, that direct payments will remain on the credit side of your trust account until you are aware of it. And you will only be aware of it when you receive your bank statement at the end of the month. And then you can say, one of my clients that transferred 15,000 rand into my trust account, and that's client S. And this 15,000 rand only reflect in the bank statement. And then it becomes your responsibility to record that 15,000 rand in your cash book And how do you record it? You simply say, client paid directly into my trust account. That means my trust account was credited with 15,000 rands. Now, I need to post this 15,000 rand credit to my cash book because it's not reflecting in my cash book. And when you post it to your cash book, obviously when you get to your cash book, the direct of credit, the opposite of credit, when you get there is the opposite, which is your debit. That means that 15,000 rand, now you will debit it in your cash book. And remember, when you debit in your cash book, you are going to debit in what we call a supplementary cash book. You are not going to work on the same cash book that you are working on for the whole month. You do what you call a supplementary cash book. A supplementary cash book is just an extension of your main trust cash book. And then you record that transaction there. You've got the bank, I'll just give you an example. You've got the bank charges. When the bank charges you, they will charge you in your bank account. They are not going to call you and say, Mr. So-and-so, today we are charging you 500 rand for this and these services. They don't communicate. They don't negotiate. They just debit your account, 500 rand bank charges. Now, at the end of the month, you receive your bank statement that says you had 20,000 rands in your bank account, but the bank debited 500 rand bank charges. Now, the balance in your bank statement says 19,500 rand. But your cash book still say 20,000 rand because there's nobody that communicated to your cash book regarding that 500 rand interest. And you could not communicate with your cash book because you did not know. Now that you know that the balance in your bank statement is no longer 20, but it's 19,500, that means minus 500 rand interest, that bank charges that the bank has charged you. And that charges now, you need to go and post them in your cash book. In your bank statement, if the bank charges you, it's going to be a debit. And now you need to post this debit to your cash book. And the opposite of debit in your cash book is going to be a credit. And remember, credit in your cash book means out. That's why it's going to the credit, because it's out in your cash book and it's going to, sorry, in your bank statement, and it must be out in your cash book. So you can see that double entry system, that double entry rule, you are basically practicing it when you do your bank reconciliation statement. So now, this transaction that I'm talking about, I want you to go to page 17. Let's go to page 17 of your manual. Paragraph number 5. And I'm going to there on 5.1. Paragraph number 5, 5.1. That's page 17. SIPO says, what do you do when the bank statement reflect more money than the cash book? Look, you will find in practice that most of the time you will find that your bank statement reflecting more money than what is in the cash book. And that money will have been made up of, let's say, your what do you call it? The monies that you are entitled to. Let's say you should have written the fees, and therefore transfer the fees into your business account. You only wrote the fees, debited your client's trust ledger, create their business ledger, but you did not make the actual transfer into your business account. And because of that money, you'll find that at some instance, sometimes that your bank statement has got more money because you did not transfer what you were supposed to transfer. So in that instance, you'll find your trust account having more money. And therefore, that's why we always say, if you are a legal practitioner, you write the fees, make sure that you transfer the fees into your business account. I always tell people to say, why do you leave the fees that you are entitled to just loiter there in your trust account while you can transfer them into your business account, even if you don't want to use it? Let it be in your business account, start any interest for you. So other than when you leave it in your trust account, remember all the trust, the interest earned from your trust account, they belongs to your legal practice counsel. You must give all of it to your legal practice counsel. You will not be entitled to anything. So that's why I'm saying most of the time, yes, you'll find that situation, but you should be able to deal with it. Now, while they're on page 5, it says they're reconciling items, and 5.1 says items in the cash book, but not in the bank statement. And then it says outstanding payment. I want us to look at this scenario. It is the 28th of February, the end of the month. If that month ends on the 28th, not 29. Now, on the 28th of February, the client comes to your office at 1 midday or 1 in the afternoon, and he pays you a deposit. And on the same day, you take that deposit and you deposit it into your bank account. Now, the problem is one. On that same 28th of February, the bank has already issued you with the bank statement at 11 a.m. Now, when the bank issue with that bank statement at 11 a.m., the bank statement is already on its way or on your email address. Now, that tells you that that deposit that you received at 1 p.m., despite the fact that it has been deposited into your trust account, will not appear on the bank statement for February. But the problem is it's appearing on the bank statement on your cash book for February. Now, the question is, how are you going to deal with that transaction? So what we are saying is, this is a February transaction because your cash book says you received it in February. So when you do your bank reconciliation statement, this transaction, you are going to record it because your cash book will say you have received this money on the 28th of February. So then you need to record it in your bank statement as the money that you received during this month. And remember, you are not going to record it on the bank statement that you have received from the bank. You are going to record what you call a bank reconciliation statement. The bank reconciliation statement, again, is just an extension of the bank statement. It's just an extension of the bank statement. So you need to be very careful there. We don't record it on the initial bank statement, but it's just an extension of the bank statement. So that is how now you see that this deposit appears in my cash book for this month, but the bank statement, it does not appear. So what we are saying is, when you do your reconciliation for the month of February, you need to record this deposit that you receive from your client in your bank statement for the same month. Then later in the following month, it's going to reconcile itself. It's going to show you in your March reconciliation that it has been reconciled with in February, and then you will not need to record it again. So that is how you deal with this. That's how this outstanding deposit comes about. It only comes about or deposited into your account after the bank statement has been sent to you. Now, the next one is, no, that's basically what I was dealing with. It's outstanding deposit. That was outstanding deposit. Now, let's look at the first one there, outstanding payments. That's transaction in the cash book, but not in the bank statement. Now, outstanding payments. almost the same thing. Let's say you make a payment, you make a transfer, and you are paying your client on the same date, the 28th of February. And then you instruct the bank that they must pay your client. But remember that transaction there, even if it's EFT, it might be subject to that 24 or 48 hours. By the time you do your bank reconciliation statement, that transaction has not yet gone through to your bank statement. Now, again, it becomes your responsibility to make sure that that transaction goes through your bank statement, because it's only appearing in your cash book. You need to record it where it doesn't appear, which is in your bank statement. How does the double entry works on your bank reconciliation statement? Now, how does it work? Is that, remember the first transaction. Let's look at the what you call it, like the example that we are dealing with here, payment. This payment that we are talking about, we say you have credited your cash book. You are making a payment by crediting your cash book. That's the first transaction. Remember, as soon as you credit your cash book, and then your bank statement must be debited. Now your bank statement is not debited, and we are saying make the second transaction by debiting your bank statement. And as soon as you debit your bank statement, that's a double entry rule. The same thing with the money that you receive. You receive that money on the debit side of your cash book. The money is not recorded in your bank statement. The first transaction will be when that money is received in your cash book. You just need to record the second transaction to complete the double entry rule. So that is why, that's how you're dealing with that. You also need to open a ledger account for the bank, or will the bank statement suffice to cater for the cash posted from the cash book and deposited into the bank account? Now, in that instance, as I was saying, that you are going to open what you call a bank reconciliation statement. So you don't work on the bank statement that you receive from the bank. You open what you call a bank reconciliation statement, and then you are going to record those transactions in your bank reconciliation statement. So it's something that we are going to record just now. We're going to take a small break, and when you come back, we are going to record that bank reconciliation statement so that you can see exactly how it works. Is this meeting recorded? I was informed that the meeting is being recorded, and that it will also be made available to all of you. Cash book represents a bank ledger in the bank account in the ledger. Yes, that trust cash book basically represent the bank. The bank account should represent the bank account. That's why we say when you reconcile, you do a reconciliation, your cash book must reconcile with your bank statement. In suggesting that entries posted on the cash book must be posted on the correct column. Yes, the entries, let me just see if the question still continues. Yes, the entries posted on your cash book must be posted on the in the correct column. It must either be a debit or a credit. So you cannot just post it in your cash book if you are not sure whether it goes to the debit or the credit side. The same thing happens in your bank statement. And as I was saying, you just need to check if this transaction is sitting on the debit side of my cash book. That means for me to post into my bank statement, I must credit. If it's sitting on the credit side of my cash book, for me to post it to my cash book, I must debit my cash book. Cash book will do all unrecorded transaction at the time of record get recorded in the supplementary cash book. Look, remember, it will also depend whether you are doing a business reconciliation, or you are doing the trust reconciliation. If it's the trust reconciliation, obviously you are reconciling your client's money. It's not your money, it's your client's money. But if you're doing business reconciliation, you are reconciling your own funds, and you'll only deal with your own funds when you deal with that business reconciliation. The difference between the trust cash book and the business cash book still confuses me. I'll explain to you just now, Paladi, when we do that reconciliation so that you can see how it works. Only difference, I believe, is one is for clients and other business expenses and income. Yes. How do you rectify the incorrect figure on the bank reconciliation? Rogers, I'll deal with that just now. When I do the practical exercise, you'll see it. I'll deal with that. How do you know which transaction need to be recorded in the bank reconciliation statement? How do you know if the transaction need to be recorded in the bank reconciliation? Number one, if the transaction only appears in the cash book but not in the bank statement, then it tells you that that transaction, you need to record it where it doesn't appear, which is in your bank statement, unless if it's a firm error. And I will deal with a firm error just now, and that's what Rogers is asking about there. That is, unless if it's a firm error, which ones I will deal with now. So you just say, this transaction is appearing in my cash book, but not in my bank statement, then you must record it where it does not appear. And you say, this transaction is appearing in my bank statement, but not in my cash book, then you must record it where it does not appear, which is in your cash book. Okay. You pay yourself by transferring what's due to you into your business bank account. Yes, you are right. You are right. You pay yourself by transferring what is due to you from the trust account, but there's a procedure that you need to follow before you make that payment. And again, I'll deal with that procedure later on so that I don't confuse you that much with that at this stage. But there's a procedure that you follow before you transfer money from the trust cash book into your business account. For exam purposes, yes, for exam purposes, you will need to know how to do your trust bank reconciliation and your business bank reconciliation. Do not worry, I'll take you through that. When we are done, you will not have to worry about anything. I'll take you through that. Now, let's go back to the manual there. Let's look at 5.2. Let's look at 5.2, items on the bank statement, but not in the cash book, which simply means so every amount which does not reflect in the trust cash book, we use supplementary cash book and record them in the debit side. Now, Emmanuel, you are not necessarily correct. If the transaction does, if the amount does not reflect in the trust cash book, we use supplementary cash book and record them on the debit side. Yes, you are partially correct. It will depend on whether that money that does not appear, the amount that does not appear in the cash book is a payment or a receipt. If it's a receipt, yes, you debit, but if it's a payment, you are going to credit. So it depends on that. It's not always a debit. Who is the signatory to the trust account? Sipo. Who goes to the bank to open a trust account? You, the legal practitioner. You are the signatory because you open that account. You are the one who has got the power to transfer money and to pay whatever needs to be paid. You're the owner of the business. The supplementary cash book reflects what was supposed to be in the cash book. Yes, the supplementary cash book will reflect what was supposed to have been in the cash book, but for whatever reason, it was not recorded. Okay. Now, 5.2, and then the first transaction there, it says bank services or bank charges. For instance, if the bank charges you for whatever services that they give you, as I said earlier on, they are not going to tell you, they will charge you. When you receive the bank statement at the end of the month, you see the bank charges. And we are saying, because those bank charges will be on the debit side of your bank statement, then you will need to transfer that debit from your bank statement to your cash book where they are not reflecting. That means you're going to credit your cash book with that amount. Interest received. If you've got good money with the bank and the bank credit you with interest, at the end of the month when you receive your bank statement, you realize that I have received interest of 500 Rand. That 500 Rand is reflecting on the credit side of your bank statement, but not in your cash book. Then you say, let me take this credit out of my bank statement and go and record it where it does not appear, which is in your cash book. And a credit from your bank statement is going to be a debit in your cash book, your supplementary cash book. So that is the interest received. Direct deposit, electronic transfers, EFTs. Yeah, we'll take a break there in the next 2 minutes, Robert. Now, let's look at the direct deposit, EFTs. When the client pays you directly, that direct payments will sit on the credit side of your bank statement. Now, it becomes your duty to transfer that credit on your bank statement to your cash book. And a credit in the bank statement becomes a debit in your cash book. Therefore, you receive in the bank statement on the credit side, now you are receiving in your cash book on the debit side. And then the same thing with your stop orders. They become a debit on your bank statement and they're going to be a credit in your supplementary cash book. And then you also yes, you also have what you call the errors that Rogers was talking about. Let me not go much into these errors, because in respect of errors, you can either have what you call the bank error or the firm error. So depending on which error or whose error you are dealing with, and then it will tell you whether it must be reconciled in the supplementary cash book, or it must only be reconciled in your bank reconciliation statement. So that is when, for instance, you've got same transaction, but the value of that transaction is not the same in your bank statement as in your cash book. Now the question is, how do you record that type of transaction? And that's what I said, I will deal with it just later on. What about incorrect amounts differ in cash book from amounts in the bank statement? Shirley, that's what I was talking about now. I'll deal with that to assist you. Entries in the bank reconciliation are posted in the reverse of how they are posted in the bank statement. Karabo, entries in the bank reconciliation are posted in the reverse of how they posted in the bank statement.
Advocate.
Yes.
Can you please repeat with the stop orders? Where are they going to be showing on your bank statement? Is it on the debit side?
Yes, or with the stop orders, they will be reflecting on the debit side of your bank statement. Remember now, you said to your bank, you gave the bank a prior written instruction to say, debit this amount on my bank account on a monthly basis, for instance. And therefore, the bank will debit your bank statement on a monthly basis, take that money out of your bank account. And I'm saying, as soon as you see that debit on the bank statement at the end of the month, then you must transfer that debit into your cash book. And then it's going to be a credit in your cash book, because in your supplementary cash book, the credit again means paying out.
Thank you so much.
Okay. Okay. I suggest maybe we take that stretch break. Can we have maybe a 10 minutes break? What I want to do is, I want us, when we come back, just to do only one exercise of your bank reconciliation statement, so that you've got something to work on, to look on this evening. So let's just take that 10 minute stretch break, and then we can come back and do at least an exercise on the bank reconciliation statement. Okay, just 10 minutes. Let's come back in the next 10 minutes. Thank you, Melinda.
Yeah. Yo, guys. So there's no music nyana for entertainment nyana in the meantime.
So there is no DJ here to play us a bit of music, voice call, to call it down.
Okay, I hope everybody is back now. Now let's proceed. Now, as I was saying I want us to look at bank reconciliation statement. And I always say, when we do these exercises, please try and pay attention. This is what you will be expected to do either in your school exam or in your board exam. There is no second chance to say, I'll go for revision classes, whatever the case might be, because this is exactly what you're going to find. Please try, pay attention. Where you don't understand, let me know. I will clarify you. I will never ignore you. I will clarify you. Okay, I'll assist you with that now before we leave. Now, I want us to do a bank reconciliation statement exercise.
Advocate,
Okay.
when you are doing the bank recon, can you please be a little bit slow? Like, don't speak too fast, be slow so that we can follow you.
Okay.
You're making it easy for us to understand. Just be slow with us. Thank you so much.
Okay, I'll do that. I want us to look at a practical exercise on page 24. Let's look at that practical exercise on page 24. Let's look at that practical exercise on page 24. You'll see there they say, your trust cash book balance as at 30th of September 2020 reflected a favorable balance of 64789. And when they tell you that the balance is favorable, more especially in your cash book, because they say it's a cash book balance, it simply tells you that it's a debit balance, because remember, in your cash book, the positive is on the debit side and the negative is on the credit side. So when they say it's a positive balance, it means it's a debit balance. The favorable bank balance on the same date was 114310. A comparison of the cash book and bank statement for September 2009 reveals the following. Number one, interest of 7108 on the favorable balance has not been entered in the cash book. I want us to look at that transaction. They say it's interest. Okay, Paladi, you forgot to mute yourself.
Oh, sorry, sir.
Okay, no problem. Now, they are saying this is an interest on the favorable balance. And if they say it's interest on the favorable balance already, they are telling you that we are talking about the bank statement. That means this is in the bank statement. That's what we are talking about, is in the bank statement. Now, interest on the favorable balance simply means the money that the bank has given you because you've got good money with them. You are a good client, to put it simple. You are a good client, they gave you interest of 7108. Now my question is, if the bank give you the interest of 7108 into your account, is your account debited with 7108, your bank account? Is it debited with 7108 or is it credited?
Credited.
It's credited. Now, if it's credited, you post it to your supplementary cash book. Are you going to debit or credit your supplementary cash book? Can see
Debit. The opposite.
Yes.
Debit.
You're going to debit. Yes. You are going to debit. I see your answers coming through here. You are going to debit simply because it's credited on your bank statement and it's going to be debited on your supplementary cash book. Yes, we are on page 24, page 24. That's where we are, page 24. Debit supplementary cash book. Correct, Yako? That's correct. Now let's go to the second one. A stop order signed for 1779 issued on the 8th of July 2020 has still not been presented for payment and has now been cancelled by the bank. A stop order issued 8 July 2020 has still not been presented for payment and has now been cancelled by the bank. I want us to look at this stop order in this way. Earlier on, we talked about stop orders and so. And we said with a stop order, it's a debit in your bank statement, and it's a credit on your supplementary cash book. That's a stop order. It's complete. Debit your bank statement and credit your supplementary cash book. Now they are saying this debit in your bank statement and this credit in your cash book has not been claimed, and the bank reverse it. Now, because it was a debit, when the bank reverse it, what is the bank going to do now?
It's going to charge you bank charges.
No, it's going to credit
No, we are
it.
not on the bank charges as yet. We are just talking about the transaction itself.
They're
It
going to
was a
credit back
debit.
to your account.
It will be
They're going to
credited back
credit
into your
it.
account.
Yes.
Correct. It's credited back into your account. Now, it was initially a debit. Now it has been credited when it was reversed. That means that's where we see it in your bank statement. It has been reversed. It has been credited back. Now, you've got a problem in your supplementary cash book because your cash book still says credit, while your bank statement moved from debit to credit. Now, you need to transfer this credit from your bank statement into your cash book. What are you going to do in your supplementary cash book now?
You debit it.
Debit.
You're going to debit it, correct? Debit side in your supplementary cash book, correct? Debit side in your supplementary cash book, debit, you are all correct. Now, let's look at the next one. EFT payments totaling 17,218 rand have not yet been presented for payment to the bank. Now, I am saying, when you do an EFT payment, the first thing that you will do is that you will record that payment in your cash book. Now, let's see. When you record a payment in your cash book, which side of your cash book do you record this payment?
On the credit side.
On the credit side, correct. Correct, credit side, Robert. Now, they are saying, credit side, yes, correct. They are saying, this credit here in your supplementary cash book has not yet been presented to the bank. Now you need to present this credit in your supplementary cash book to the bank. What are you going to do at the bank? What are you going to do at the bank?
You debit the bank.
Debit.
Correct. You are going to debit the bank because it's a credit in your cash book. It's a payment out of your cash book, and it must also be a payment out of your bank statement. It's debit in the bank statement, bank recon debit, bank recon. All of you are correct. Please give me just 1 minute. I need to get a charger for this phone. It tells me the phone is very low. It's gonna switch off. Let me quickly speak to Suzuki. Suzuki, I think you are listening here. Can you please provide me the charger for your laptop here? Is going to switch off. The EFT saga. Okay. Now the EFT, that was, what transaction was that? Oh, the EFT, that was transaction number 3 that we were dealing with. I'm saying there on that EFT, they say the EFT payment. Now, let also try to clarify this. You are going to have an EFT payment, which is what you are paying as a legal practitioner. And then you are going to be an EFT by your client. An EFT by your client is what the client pays you. So every time we say EFT payment, and we don't say anything about client, you need to know that this is a payment that is made by you as a legal practitioner. Unless we say EFT payment by your client, and then it's a different story. Now you know this money received from a client, but EFT payment is what you pay. Like there on number 3 there, it says EFT payments totaling 17,218 have not yet been presented for bank to the payment. Now, you do that EFT, obviously, as soon as you do that, you instruct the bank to pay that EFT. Now, what we are saying is that the bank has not paid it. Okay.
No, it's not.
Advocate.
Hello?
I just want clarity here.
Okay.
The deposit, where are we now?
No, it's... Oh, no, your laptop. Okay. For the laptop, yeah. Okay. That question again, sorry, they gave me the wrong charger here. They are getting the right one. That question you were saying?
EFT payment totaling this amount have not yet been presented for payment to the bank or by the bank.
To the bank.
Not by the bank.
No, the bank does not present EFT payments. So it must be presented by you. Remember, when you are basically instructing the bank to pay, but that instruction has not yet reached the bank.
Okay, thank you.
Okay. So the EFT payments will come from the business account. No. Here we are talking about the trust account. This is for the trust account, not the business account.
Advocate, I have a question.
Yes.
So now, if the payment has not reflected from the bank has not received the instruction for the payment, right? So will the bank now be debited of that amount?
Yes, you debit the bank with that amount.
And
why do you do that? Why do you do that? Remember, in your cash book, I'm just giving an example.
Yes.
You had a total amount of 30,000 rand.
Yes, sir.
Out of this 30,000 rand, you had to make a payment of 20,000 rands.
Okay.
Now, this 20,000 rands now, as soon as you give that instruction, that 20,000 rand is no longer trust money, because it must be paid. It must be paid out. That's why even if it has not been paid out by the bank, but you're going to record it as if it has been paid out to show that it's no longer my money.
Okay. All right. Thank you, sir.
All right.
Sorry, put differently, advocate.
Yes.
On that same item number 3.
Yes.
On my cash book, I would have recorded that on the credit side because it's a payment.
Correct.
Now, isn't it easier for my mind just to say, because I've credited this on my cash book, I would simply debit it on the bank reconciliation?
Exactly that. You're quite correct. That's exactly what you're going to do in your bank reconciliation. Because it's a credit there, you simply go and debit your bank reconciliation statement. Correct.
Okay, thank you.
All right. Now, that EFT, I was saying, okay, there's another question.
Sorry, I just have a quick question on the bank reconciliation statement. There's 2 types of forms they present us. One they show with a debit and a credit. It's the lower part of the bank reconciliation statement, and the upper part is, for instance, they say the balance as per bank statement, less outstanding EFT payments, and then they go on forth. Which do you prefer we do in exams and also in practice?
Yeah, I'll prefer that one that they say there, the standard format. You see the standard format, the bottom one.
Thank you very much.
Yeah,
Thank you very much.
I'm also going to do it by means of that, what do you call it, the standard format.
Okay, thank you very much.
Okay. Now let's quickly finish that EFT for Ntate Mokoena there. Let's finish that EFT. We are saying this EFT, Ntate Mokoena, is what you are paying out of your cash book, because you see the statement says EFT payment. That's why I was saying you need to do not just concentrate on the EFT and assume it's the same thing. Here it says EFT payment. You might get another statement say EFT payment received from your client. Now, those two are not the same. There's a payment that you are making, and there's a one that you are receiving from your client. So this one here at Roman figure 3, it's a payment. That means it's what you are paying out. And what I'm saying is that when you pay out, you'll credit your cash book. Now, they are saying this credit in the cash book has not yet been presented to the bank. Now, what I'm saying is, when you take a credit out of the cash book and you go and present the credit in the bank, it's going to be the direct opposite. Because it's a credit in your cash book, in the bank it's going to be a debit. And a debit again in the bank statement means payment. Now, that is how the EFT payments works. It's a payment out of your cash book on the credit side, and then it must also be a payment out of your bank statement. As I was telling the other one to say, yes, in actual fact, the money is still in your trust account, but doesn't belong to you anymore on the basis of the instruction coming from your cash book that says the bank must pay this money. Now, if you don't take it out, your cash book and your bank statement will never balance. That's why you must take it out as it has been taken out of your cash book, so that these two accounts, your cash book and your bank statement, will balance at the end of the day. Okay. All right. Now let's go to the next one. Number 4. A deposit of 3,114 made on the 30th of September 2020 is not reflected in the bank statement. Now let's look at this deposit. They say, okay, thank you, Ntate Mokoena. They say this deposit is not reflecting in the bank statement. Now the question is, where is it reflecting? It can only reflect in either of the two, either in the cash book or in the bank statement. Now they are saying this deposit is not reflecting the bank statement, which means it's only reflecting in the cash book. Now let's look at the deposit in the cash book. A deposit in the cash book, is it a debit or a credit in the cash book? Let's start it there.
The debit, sir.
It's a debit, correct. Now you need to transfer this debit from the cash book. You need to transfer this debit from the cash book to your bank statement. Now, are you going to debit or credit your bank statement?
Credit.
You are going to credit, correct. You are going to credit. That's how you record credit your bank statement. Thank you. Thank you. Thank you. That's how you're going to record that transaction. Now, I want you to pay attention on the next one. Number 4. No, number 5. An EFT for 2736 drawn on the business account has been erroneously paid by the bank from the trust account. Okay, I need to get Shelley's question there. Does it mean that it's a transaction in the bank recon double debit on credit? Shelley, can you unmute yourself and explain here on that question, your question? Shelley?
Sorry, advocates, I have a question.
Yes.
Yes, please may you repeat the answer to question 4. Are you saying that because the deposit has not yet reflected, it has not... Okay, is it coming from someone or are we sending this money to someone?
Yeah, this is the money that came from someone. When they say deposit, and they say it is not, yeah, when they say deposit, more especially in your trust account, the deposit will always be what you receive, because as a legal practitioner, you will not deposit somebody money, but you will pay somebody. So every time we say a deposit, that means it will be money that you have received. Like in this instance, they say deposit of 3,114 made on the 30th of September is not reflected in the bank statement. So as soon as they say it's a deposit, the assumption is that the deposit that you have received in your cash book, but it's not reflecting in the bank statement. It might be one of those deposits that say it was deposited after you have sent you the bank statement.
Okay, that makes sense then. Yeah, the date's the 30th of September. So that makes sense.
Yeah.
Thanks.
Yes, correct. Okay. Now, number 5. EFT for 2736 drawn on the business account has been erroneously paid by the bank from the trust account. Now, I want us to firstly know or understand that we are dealing with a trust account here. Because if you see the statement at the beginning, they say your trust cash book, that tells you we are dealing with a trust account. Now look at that transaction at number 5. EFT for 2736 drawn on the business account. That tells you that EFT is a business transaction. That EFT of 2736 is a business transaction. Now they say has been erroneously paid by the bank from your trust account. That business transaction was paid from the trust account. That means somebody made an error, so.
Correct.
And which error is this?
It's a bank error.
Correct. That is what we call a bank error. You gave them instruction to pay that value out of the business account, but for whatever reason, it was paid out of your trust account. This is what we call a bank error. And because it's a bank error, you don't post a bank error to your cash book. It's a bank error. It must be fixed in the bank statement.
Okay.
If it's a bank error, it ends in the bank statement. Now, how are you going to deal with that? Firstly, the bank has incorrectly debited your account. In other words, the bank took money out of your account by mistake. Now you speak to the bank. What should the bank do now if they agree that they have made a mistake?
Reverse. Reallocate to the correct account.
Correct. They must credit.
Reverse the payment, but this will be shown in the bank reconciliation statement. Meaning, if it was debit here, if it was paid by the bank, then it will be credited in the reconciliation statement.
Correct. That's exactly how you are going to deal with that bank error. The bank initially debited your account. They paid this money out of your account by mistake. Now they must credit it back. They must reverse the transaction. We are not dealing with a business account. Don't record anything and then tell me that it's recorded in the business account. We are not dealing with the business account. The business account will be dealt with wherever it is. Here, we are only dealing with the trust account. We only want to see the transaction in the trust account. It was a debit. Now it's going to be credited back. That's all is going to happen on this transaction.
Sorry, advocate, may I please ask?
Yes, yes, ma'am.
Since it was now incorrectly paid from the trust account to when it was not supposed to, so do you first debit it and then after the reversal is done, you credit it back into the trust account?
No, you don't debit it. The bank has already debited it.
Okay, so you don't show the amount that was taken away. You just leave it as it is.
Yeah, you don't show the one that was taken away. It's already there. You don't show it anywhere when you record this transaction. You only record one transaction of credit.
Which is on your bank recon.
On your bank record, correct.
Okay,
Yes.
thank you, Advocate.
All right. Okay. Now let's look at the let's look at this next one here, which is your
Advocate, sorry to disturb.
Yes.
Can I ask?
Yes, yes.
So, under the bank recon, is the interest is the first two transactions, so the stop order and the interest.
Can you repeat that again? Under?
Okay, so I'm saying on the bank recon.
Yes.
I'm going to record the first two transactions, the interest and the stop order.
The interest of 7108.
Yes, and the stop order of 1779.
That interest of 7108, you will record it in your supplementary cash book on the debit side.
Both of them, so it's just there, not on the bank recon.
Yeah, only in your supplementary cash book, not in the bank recon.
And then the one that you were doing now, the bank error, is going to be on the bank recon.
Only on the bank recon on the credit side, yes.
Okay, thank you so much.
All right. Now let's look at number 4.
Number 6.
Is it number 6?
Number 6.
Yes, number 6. Number 6, correct. It says there an EFT. I always want to correct that statement because the way it is, it might mislead you and you may not understand what it means. I think the drafter of the manual understood what it means, but I always have a problem because it's just saying EFT reversal of 734 has not been entered in the cash book. Now, I always want to clarify it to say this is an EFT from client. In other words, this is an EFT from client. Shelly, can you forgot to mute yourself?
Oh.
Okay. Now, I always want it to be clear so that you don't it doesn't confuses you. That EFT there, where number 6, where it says EFT reversal, that's an EFT from your client. That's an EFT from your client. In other words, when that EFT was received initially, it was credited in your bank statement. And then it was debited in your cash book. Now the bank reverses it. When the bank reverses it, the bank is now going to debit your your bank statement. And when the bank reverses it by debiting your bank statement, now you must credit your supplementary cash book. So that EFT, I want you to clarify it to say it was an EFT payment that was received from your client. And if it's an EFT that was earlier on received from your client, and then you say to yourself, when EFT is received, how do I record it before this reversal? I'll credit my bank statement and I'll debit my trust cash book. When it's reversed, that means the bank is now debiting my cash book. Now I must, my bank statement. Now I must credit my cash book with that amount of 734. So that one is going to be a credit in your supplementary cash book. Now, number 7, we're still going to record this transaction together very quickly. You'll see how I'm going to record it. Number 7, electronic transfer of 30,000 by a client has not been entered in the cash book. This is an electronic payments by client not entered in the cash book. Now, Portia, do you have a question? Portia?
Yes, sir. I just wanted you to actually repeat number 3 on the stop orders. I was just a bit, I'm a bit confused on that one.
The number 3 on stop orders. Number 3 is EFT payment.
I mean, number 2, sir. I'm sorry.
Oh, number 2.
Yeah.
Now, that stop order there, they say a stop order signed for 1779 issued on the 8th of July 2020 has still not been presented for payment and has now been cancelled with the bank. Now, I said, let's look at a stop order. When you look at a stop order is a debit on your bank account. And if it's a debit on your bank account, it's going to be a credit in your cash book, because debit in the bank account means payment and credit in your cash book means payment. Now, that a stop order is complete. Now, what are they saying is happening with the stop order? They are saying the bank is reversing it. In other words, that initial debit in the bank statement, the bank reverses it. And when the bank reverses a debit, that means they are going to credit you. And now we are saying, we've got a credit in the bank statement. What do you do with this credit in the bank statement in the cash book? Because it's a credit in the bank statement, that means in the cash book you are going to
debit the cash.
Debit it in your cash book. That's how that debit works. So you have to follow it as to where it started. Now, there's a question here from Karim. Let me see what it says here. Number 7, it says, is a direct deposit. It goes into the supplementary cash book and it will be on the debit side. Correct, Karim? Dandon Dofu, advocate, please repeat number 6. I didn't understand. Number 6. Okay. I am saying that EFT there, I want you to be specific there to say that was an EFT by a client. That was an EFT by a client. Now they say EFT reversal of 734 has not been entered in the cash book. Now that EFT that you received from a client. Now, firstly, let's receive an EFT from a client. When you receive an EFT from a client, it's a credit in your bank statement and it's a debit in your cash book. That is how EFT works. It's a credit in your bank statement and it's a debit in your cash book. Now they are saying it's been reversed. Now, when it's reversed, the person that will first reverse that EFT will be the bank. Now, that credit, because remember, when it was EFT'd into your account, it was credited. Now, the bank reverses it, the bank is going to debit it. Debit. Yes. Now, I'm saying this debit, now transfer it to your cash book. Because it's a debit in your cash book, what are you going to do? Sorry, it's a debit in your bank statement. What are you going to do in the cash book?
Credit.
Credit, correct.
Sorry, advocate. Why would we have such ambiguous statements?
Look, I think the person who was who recorded that question on the manual, he did not record it. You know, when you do it from your own knowledge, because you know what you are trying to say, and when it gets to somebody else, you might interpret it in different way. More especially when you are dealing with students, most of them do not understand bookkeeping, so it becomes a bit very much ambiguous, as you say. That's why I'm saying it should have been clarified to say it's an EFT from a client, but has now been reversed. That way, then you know exactly what you are dealing with. But look, I don't think you'll get a statement of that nature in your exam. There will definitely be clarified so that you understand what you are dealing with.
Thank you very much. Otherwise, we'll panic thinking that we did something wrong.
Yes.
Advocate, may I also please just ask a question? I'm not sure whether you covered this, but because I joined in late, I just wanted to ask Advocate, what is the purpose of a cash book? Please explain it to me as if you're explaining to a 2-year-old, because I don't have any accounting background.
Oh, the purpose of a cash book.
And how it differs from the bank account, because I see sometimes when we credit the bank account, we debit the cash book. So how do the two differ?
Okay. Your cash book is basically what you call your book of prime entry. Your book of prime entry, your primary book of entry. And initially when we started, I said your trust cash book and your business cash book, they will always receive on the debit side. In other words, if you are receiving money, if you are sitting in your office, the clients come to your office and they pay you the deposit. That deposit that you receive from your client, you are going to record it in your cash book. And when you record it in your cash book, you are going to record it on the debit side, because the debit side of your cash book is where you receive. And as soon as you receive that money on the debit side of your cash book, and then the money goes to the bank, and the bank statement will be credited. So that is what we call the double entry rule. When you debit one account, the other one must be credited. Okay. And we said the same thing regarding the payment, to say when you pay from your cash book, payment from your cash book will always be made from the credit side. And that credit from your cash book, let's say you make a payment 200 Rand by crediting your cash book. And that payment, remember, the actual money is going to come out of your bank statement. Now we are saying this 200 Rand credit on your cash book is a payment. Now this actual payment come out of the bank account, and when the bank makes that payment, the bank is going to debit your bank statement. And that is what we call a double entry rule. So your cash books works in the direct opposite of what you know a debit is and a credit is in your everyday life.
Thank you, Advocate.
All right.
Another question on number 6, in terms of the EFT reversal that you just explained.
Yes.
Now, in an event where, you know, for an unlikely reason, you construe it in the context in which it is, where, according to the way you construe it, it is meant to mean the reversal that you pay yourself. You know, you make a payment on EFT, then that payment bounces back. Now, would it be correct to say, since you paid it out of your trust cash book, it's going to be credited, then the fact that it has been returned, it means you have to debit it again in your trust cash book.
Yeah. If it was that way, and then it will be a debit in your cash book. And remember, what the other problem that I have with that transaction is that when you are a legal practitioner, we don't expect any payments that should be returned from your trust account. So payments cannot be returned. That's why, while we'll still be using checks, we say a legal practitioner's check cannot be reversed unless if the check it has been tampered with. But if you issue the check, it must be paid as it is. If you make a payment, we expect that you know that you've got money, and then it must be paid out. Okay, so, but you're correct, the way you explain it, and then if that was the case, then it should have been exactly that way. Okay. Now, can we work on that question together now? I want you to have a paper with you. I want you to have a paper with you. I want you to have a record a T account. Record a T account for me.
Advocate, sorry to interrupt. I just have a question before we move forward.
Yes.
Yes, so the supplementary cash book is to recon what's on the bank statements and not on the trust cash book. And then the bank recon statements is to recon what's on the trust cash and not on the bank statements. Is that it?
That's correct. You are basically whatever appeared in the bank statement but not in the cash book, you record it in the cash book. Whatever in the cash book but not in the bank statement, you're going to record it in the bank statement. Correct.
Okay, thanks.
Yes. Now let's quickly do a T account. And that T account, name it Supplementary Cash Book for September 2020. Do a supplementary cash book. And that's supplementary cash book, name it, sorry, a T account, and you name it a supplementary cash book. You name it a supplementary cash book. Now I need to quickly draft this and then I can display it for you to see. And then I want you to do another account that is going to look like this. Let me see. What's happening?
Okay.
Or let's just go to your. I'm not sure what's happening here with me.
Sorry, Advocate.
You were coming all right.
You need to disable the background on Microsoft Teams. It's because the background is enabled. It's only trying to show a person's figure. It doesn't show the page.
Oh, sorry about that, man.
Yeah, you need to disable that background there.
I'm very illiterate when it comes to computers.
Yeah, you've been school advocate, don't worry.
No, thank you. But let's quickly go to page 25. Go to page 25. Page 25 of your manual. Now, I want you see there are two columns there. The first one, supplementary cash book for September 2020, and the next one says bank reconciliation statement, and it says standard format. I want you to draft something like that. Only the column. Don't write anything inside those columns. I want you to write something like that.
Sorry, Advocate.
Do a column of that nature.
Sorry, Advocate.
Okay. Now,
Hello?
please. Hello?
Yes, I don't have the manual. So I think what you wanted to do will be more appropriate for some of us without manuals.
But you can download your manual from resources. Everyone can access that. It has been there since day one.
Okay, I will try and do that.
Yeah, just to go on sites, click on resources, go on LPBK active, what, then you can get it. You should have navigated that long time ago.
Okay, thank you.
Yeah, we can see it, Advocate.
Okay. Those who say they don't have manual, please do something like this. Remember, the first one is a T account, supplementary cash book. This one, you name it Bank Reconciliation Statement as at 30th of September 2020. Bank Reconciliation Statement as at 30th of September 2020. So give it that name, Bank Reconciliation Statement as at 30th of September 2020. It's very important that you write the heading of these accounts as complete as they are. At times you get a mark for just writing that heading as complete. Bank Reconciliation Statement as at 30th of September 2020. If you just write Bank Reconciliation Statement and leave it like that, you will not be given that mark. You just write supplementary cash book, leave it like that, you will not get that mark. So try to record it in full. Bank Reconciliation Statement is at the end of the month and the year. Supplementary cash book is for the month and the year. Please remember that. Now.
Hi, sir.
Okay.
Quickly,
Yes,
I just want clarity on supplementary cash book.
Yes.
Am I correct to say that on the debit side, I record my receipts, and on the credit side, it's payment?
Correct. All the payments,
and what?
record them on the credit side. All the receipts, record them on the debit side.
And with regard to bank reconciliation, is it the same procedure or?
The bank statement is just a direct opposite. The
Bank
receipt
reconciliation.
in your bank reconciliation statement, the one that I've just shown up here. This one, it's disappearing again. The one that I've just shown here. Then there is going to be a debit remains a debit. It's a negative. And a credit means credit you are receiving. So in the bank reconciliation statement, everything goes back to normal. Your cash book, remember your cash book, your supplementary cash book is an extension of your cash book.
Yes.
So what was the debit in your initial cash book, still a debit in your supplementary cash book. Okay. What was credit there still remains here. In other words, in the initial trust cash book, debit was receipt. In your supplementary cash book, debit still receipt.
Yes.
And the credit means the payment. Yes.
Thank you.
Advocate.
Yes.
So for the third transaction,
yes,
the outstanding EFT payment, is it only going to be shown on the bank recon?
Yes, it's only going to be shown on the bank recon because it's already showing in your cash book.
Okay.
You record it where it's not reflecting.
So that it's the outstanding payment that you were talking about.
Yes, yes.
All
no,
right.
Yes, that's the outstanding payments, correct.
All right, thank you.
All right. Now, let's start that question again. It says your trust cash book balance as 30 September 2020 reflected a favorable balance of 64789. Let's pause it there. They say that balance is favorable. If it's favorable, that means where are we going to record it?
On the debit side.
Right.
Correct. On the debit side of our supplementary cash book. In that T account that I said you must draft, just go to the left-hand side, which is the debit side, left-hand side, and you simply record balance. Just say balance, and you write that figure there, 64789. Completely on the debit side, on the left-hand side of that T account. Simply balance 64789, and you leave it like that. You don't record it twice, just once. Now, let's go to our, they say that the favorable bank balance on the same date was 114310. Let's go to that account for your bank reconciliation. That bank the one that I said you must draft it, the one that I was showing here, bank reconciliation statement as at 30th of September 2020. Let's go on that one. You see on the far left here where there is a bigger space. On the far left, you are just going to write balance as per bank statement. On the bigger section there on the left-hand side, balance as per bank statement. Balance as per bank statement. And now, after you wrote that balance as per bank statement, the next thing you see 2 columns. The first column there will be the debit side, and the second one will be your credit side. Sorry, I think I made a mistake here. You don't need the 2 column basically. Let's use the first column. Cancel that debit or credit because I said we need to use the standard format. So cancel the first column there, just 1 column only. The left-hand side, you write the narration. The second one, you write the values. In other words, on the
Sorry,
first
sir.
column.
Quick question, sorry.
Let me do it for you now. I'll show it to you just now. Oh, 114310. I am saying because I want us to do the standard format. For that reason, I want you to take away the first column there. Yeah, you see the second column, I've cancelled it. Use the first column only, like that. Balance as per bank statement, 114310. And the rest of the other transaction will come underneath that 114310. It will either be a debit or a credit. But I want you to do away with that another column which was supposed to be the credit column. So just cancel it out. Okay. Now let's go on and I'll show you how you record the transactions in that column. Now that we have recorded our balances, let's go to the transactions. Number 1, interest of 7108 on the favorable balance has not been entered in the cash book. This is interest on the favorable balance has not been entered in the cash book. Now, we all agree that this interest that we have received, and if it's interest that we have received, it simply means it's a credit in our bank statement. Now, what do we do in our cash book?
We debit that.
We are going to debit it in our cash book, isn't so?
Correct.
Then go to the debit side of your cash book, the left-hand side, your supplementary cash book. And then you, on the left-hand side, you can just go there and say interest or interest received, 7108. On the left-hand side of your supplementary cash book, interest received, 7108, supplementary cash book. Okay. Number 2, stop order signed for 1779 issued on the 8th of July 2020 has still not been presented for payment and has now been cancelled with the bank. And I said earlier on that if it's a stop order, it was initially a debit on your bank statement and it was a credit in your supplementary cash book. And now they say it has now been reversed. If it's reversed, it simply means the bank is crediting it. Now, we've got a credit in your bank statement, which you need to record, you need to post your supplementary cash book. Are you going to debit or credit your supplementary cash book?
Debit.
Debit. Debit, correct.
Debit, because you are receiving it back.
Receiving it back, correct. Stop orders.
So on the description, what you say, stop order returned?
Oh, yeah, you can say stop order reversal of stop order or stop order reversal. It's okay. Anyway, as long as you make sure that whoever read that should understand that is you are reversing that stop order. So I always tell students to say, narrate, because I see Robert is also asking the same question. Every transaction that you record, you must narrate, whether it's a balance or it's whatever the case might be. Narrate it in a way that we understand what that value represents.